turnover. But in the Finance Act 2020, it has been adjusted to 0.25% of gross turnover for return filed in 2020 year of assessment and 2021 year of assessment. So 2020 year of assessment will cover 2021 year of assessment will cover 2020 accounting year, and 2020 year of assessment will cover 2019 accounting year. Okay, so it's 0.25% of gross turnover. Yeah, general question. This is ask your question from what you've been doing from day one, because this is the last session for this group. So you could ask your question, and I'm sure you've learned one or two things, one or two feedbacks, one or two comments. I'll even take you one after the other. So, Mr. Kimbowale, Mr. K.
Hello, Mr. Bina. Please, can you? Hello, Mr. Bina.
Yes.
Please permit me to add a little submission for the benefit of our colleague out there.
Okay.
For the purpose of minimum tax and gross turnover, and please take note that the law that Finance Act 2019 actually define what constitutes gross turnover. So for the purpose of this minimum tax, it's not the same turnover of the company. Mr. Obina has mentioned that less frank investment income. But don't forget that also define it as anything that comes into company as receivable or received must also be added back for the purpose of this definition. So I will read, said gross turnover means the gross inflow of economic benefits, cash, revenue, receivable, other assets arising from the operating activity of a company, including sales of goods, supply of services, receipt of interest, rent, royalty, or dividend. So, meaning that for the purpose of this minimum tax, when you are computing minimum tax, note, you don't just absorb or take the gross turnover of the company. You have to compute turnover for the purpose of minimum tax. So, in that case, if there's interest received, you have to add it together. If there is anything received as a result of operating activity of the company, you have to add it together to give you the gross income, gross turnover for the purpose of minimum tax before you now deduct your frank investment income. So if you have royalty, dividend, all sort of everything that comes in, you add it together. So meaning that for the purpose of minimum tax, you have to compute your gross turnover for the purpose of minimum tax. Thank you. Mr. Obina, you can take it from me.
Okay, yeah. Well done. You need to be wary as well, as what Mr. Kenya said, because you see, when you add all those things to your turnover, your minimum tax will be very, very high. It will even be more than what it will use to be when we have before the Finance Act. So again, there's a kind of a way of challenging the law. We can also hear to question the law as well and saying that what is turnover, because if you look at the IFRS financial statement, you now do your turnover for financial reporting, IFRS purposes, and we have other income. We have finance income, we have the finance cost, we have the net finance income. So there are some lines that, of course, the tax man wants you to now add to turnover. That will kind of increase your tax payments in terms of minimum tax. As I want to bring to us that tax planning is not done only by individuals, like companies, it's also done by governments. And if you look at Nigerian budget is increasing. So they are bringing out the Finance Acts to raise additional tax revenue to finance Nigerian budget. So basically, we rest assured, put at the back of your mind that as you are doing your tax planning, then the government is also doing their tax planning. Their own tax planning is they want to make more money from you. Your own tax plan is you want to reduce money you pay to the government. So you must be very careful. So just take note of that as you're adding all what Mr. Kenny has pointed out to, I mean, based on the law, that's the requirement of the law, then you should be able to know that you are paying more amount of money to the government eventually, because your gross number will go up. Okay, so just put that back of your minds. So if there's opportunity for tax planning that will be discussed in subsequent module, you could look at that so that you can reduce legally the amount you will pay as minimum tax. Okay, so Mr. Kayode is on the road. I think he made a comment somewhere in the chat box. He said, "Oh, on the road. My question is on withholding tax on contract. At what point would you consider this? Is it when a contract subsists between party?" Okay, I think it's on withholding tax. Mr. Kenny, this question is on withholding tax. He said, "On the road. My question is on withholding tax on contract. At what point would you consider this? Is it when a contract subsists between the parties? When do you consider this deduction of withholding tax?" And that is what Mr. Kaido wants to know.
Okay, let me start by saying withholding tax application is basically on qualified transaction for withholding tax. We have mentioned what are the qualified transactions for withholding tax. We've mentioned withholding tax on dividend, on rent, on professional services, on royalty, on contract. Now, contract, existence of contract, the law, there have been a judgment recently that whether or not there's a contract. Now, writing, contract can be verbal, can be written, can be anything. So there are some documents that signify existence of contract between parties. For example, PO, purchase order. I don't need to sign any contract with anybody before I know there's a contract between party when there's a PO. So, for example, if somebody walk into your shop as a car dealer and he pays you whatever amount to pay for two vehicles, I take the car away. You don't need that person information. That is the basic accounting knowledge. That the moment you start writing the name of individual customer, meaning that there's a contract that exists, there's a payment arrangement in terms of the credit facility or payment or later payment or payment in the later time. So if there's a PO between party, whether or not there's a contract in written or not, withholding tax we apply. That is a qualified transaction for withholding tax. No. Now to your question that at what point will it apply? Is it when there's a contract or no, or when there's a contract that substitutes between parties? So with my definition now, if there is contract or no contract, once there is a qualified transactions between parties, withholding tax will apply. Withholding tax will apply. And you don't need to have a written contract before you say it is contract. It can be verbal, it can be written, it can be anything. And the moment there is a PO, there's a PO between customer, there is no direct invoice, there is this, or what other thing do you call it? I can't remember now. But those are the things that basically will signify make that contract or make that arrangement a qualified transaction for withholding tax. And withholding tax of 5% we have applied that kind of arrangement. Thank you, sir.
Okay, thank you for that. Again, looking at our tax law, they are basically cash based. Okay, and I think it has been clearly stated that it's cash based. So when it comes to deduction of withholding tax, when you're making the payments on qualifying transaction, then you deduct withholding tax. Okay, and not when you receive the invoices. So we have that question, and take note the same thing when it comes to VAT. You pay your VAT when you receive the cash from the custom. I mean, when it's not when they've given you invoice. Okay, that's when or you've issued out invoice. You now want to go and look for money, borrow money to pay government VAT, and because of your customer has not paid you VAT. Clearly, in the Finance Act, it's cash based now. It's when they paid you, money has come in, then you remove the VAT and pay the government. So there was this argument before now, whether it is cash based or accrual based when it comes to VAT. So, but there's clarity on that now. The same thing applies to withholding tax. When you're making your payment, deduct withholding tax. And of course, as Mr. Kenny have said, it's on qualifying transaction, which I'm sure we all know. Okay, Madam Adeshola Adetunji, your comments in our last class today. Hello, Madam, you can unmute yourself.
Good afternoon.
Good afternoon, ma'am.
Good afternoon.
Good afternoon, ma'am.
Yes, I would like to say it's been an interesting